Raoul recently warned that time is running out for anyone who hasn't yet positioned themselves in the crypto market, and honestly, I think he's spot on. The clock is ticking, and the opportunity window is getting narrow by the day. It's a similar situation with the recent updates on the China trade deal. Big moves are being made fast, and if you're not paying attention, you might miss out. One of the key things I'm watching right now is the timeline for interest rate cuts. A few weeks ago, June or July seemed like the likely window, but now, out of nowhere, major players like Goldman Sachs are saying the first rate cut won't come until December. That's a huge shift and kind of wild if you ask me. Should we really be taking these big banks at face value? Personally, I say no. History shows us that these big financial institutions have a habit of saying one thing and doing another. They're experts at playing the market to their advantage. They'll feed the public one narrative, then act in the opposite direction while laughing all the way to the bank. That's why I've always taken their forecasts with a grain of salt. Goldman now claims that the Federal Reserve will hold off on cutting rates until the end of the year, using trade war developments and recent financial easing as their rationale. They've revised their 2025 GDP growth outlook upward by 0.5 percentage point to 1% and dropped their recession forecast to just 35%. They also adjusted their inflation expectation, predicting a peak of 3.6% instead of the earlier 3.8%. All this adds to the debate: will the Fed wait until December or act sooner? In my view, we're more likely to see action this summer. I'm still focused on June or July as the target window, but I'd love to hear what you think. Drop your thoughts in the comments below. We've already seen the Bank of England make a move. They cut rates on May 8th by 0.25 basis points, which could be a strong hint of what's coming in the US. So now the big question is, will the Fed match that with a 0.25% cut or go bigger with 0.5% question mark? I'm leaning toward a summer cut, and I think once that happens, markets are going to react quickly and powerfully. I also believe we'll see some wild movement in the M2 money supply. That's why Raoul's comments and charts are so relevant. His take on M2 has been closely aligned with Bitcoin's recent surge, and that correlation is something we can't ignore. Shifting focus for a moment, let's talk about China. The recent US-China trade agreement is being seen as a huge win for Beijing, and it's a big deal. This marks a turning point, especially with tensions cooling between two of the world's biggest economies. That's a relief for global investors, because when these two nations get along, the markets tend to breathe easier. Fewer trade tensions mean traditional stocks have room to climb instead of being weighed down by uncertainty. China's leaders are already calling the agreement a major success. After just 2 days of discussions with American officials, they managed to get the Trump administration to roll back its steep 145% tariffs that had pretty much frozen bilateral trade. Following the news, stock markets around the globe rallied. Both Beijing and Washington hailed the deal, and traders took that as a strong positive signal. Looking ahead, rate cuts are back on the radar. All eyes are on either June 18th or July 30th for a potential decision from the Fed. Personally, I think June 18th is looking more likely, especially with the recent progress in US-China relations. While there are other global dynamics at play, this particular trade development has been front and center for a while, and we've talked about it often on the channel. Now let's connect this to something even more exciting: alt season. I posted earlier about how Ethereum just posted a massive 48% gain in a single weekly candle. That's not something you see every day, and it's a strong indicator of what might be coming next. We've been hearing about an alt season for months, and it finally looks like it's about to unfold. The last time Ethereum made a move like this, it was December 2020, right before the last alt season exploded. When you add this to the chart patterns we're seeing, especially the banana zone trend from Julian at GMI, it gets even more compelling. He mapped out Bitcoin's historical cycles starting from 2011, with each one spanning several years: 2011, 2013, 2014, 2017, 2019, 2021, and now 2022 through about 2025. According to his chart, we're currently in what's known as Phase 2, a stage where Bitcoin first rallies, then corrects, and then rockets up again. That second surge, that's what people call the banana zone. Of course, everyone has their own theory about where the top might land, but this is one scenario I've been watching very closely. And to add to that, Raoul recently shared that he expects Bitcoin to make significant gains heading into the first quarter of 2026. If you've been following me for a while though, you'll know I've been calling for a potential market peak even sooner than that. We're entering a key moment. Between macroeconomic shifts, Ethereum surge and historical Bitcoin cycles aligning, it feels like we're right on the edge of something big. I'll break down exactly why I believe the market will peak earlier than most people expect, but before we get into that, let's hear what Raoul has to say. He lays it out clearly. What we're witnessing isn't some new mystery. It's just another chapter in the same debt cycle that repeats again and again. Governments are managing their obligations the same way they always have, by rolling over debt and injecting more liquidity. This has nothing to do with Bitcoin halving cycles, it's all about liquidity patterns and the flow of money. According to Raoul, the market moves in waves and he refers to these as banana zones. First there's an upward move, banana 1, then comes a correction followed by banana 2. After another pullback, banana 3 takes off. That pattern played out in 2017 and again in 2020 and 2021. It looks like we're in a similar setup now. The structure couldn't be more obvious to him, and he supports his view with a blend of macro data, technical charts, and sentiment analysis. His message: buckle up and stay disciplined. Don't get caught up in FOMO, don't risk everything with leverage, and definitely don't lose access to your wallets. The next big correction could be around 35%, and when that happens, people will panic, thinking it's over, just like they always do. His research suggests that due to the extended nature of this business cycle and higher interest rates staying in place longer than expected, liquidity is projected to keep flowing well into the first or even second quarter of 2026. This aligns perfectly with a potential political push from Trump during the lead-up to the midterm elections. Everything appears to be syncing up just right, and Raoul's view is that the cycle has already begun. His advice: stay focused, keep building, and support growth across the ecosystem, especially with emerging platforms like Sui. Now switching gears for a second, if you watch the full version of Raoul's presentation which took place at Sui base camp in Dubai, there's an important section that dives deep into alt season and how it ties to the broader business cycle. Let's look at that segment for a moment. He explains that while the exact timing of events may not line up perfectly, the big picture pattern is becoming clearer. People predicting Bitcoin at $150K or $250K are likely still traumatized by the last cycle, and they're missing what the forward-looking data is telling us. Raoul emphasizes that this is actually how alt season happens. It's not magic, it's economics. When the business cycle is in a lull and household income is still under pressure, risk assets like altcoins tend to lag. But as liquidity returns and the